with Mark Mobius of Templeton Emerging Markets, isn't it?
Do you think we have finally turned the tide in emerging markets?
I think we have, because everybody during the years ending at the beginning of last year, the 3 years where we are underperforming, everybody was concerned about interest rates in America. And they failed to realize that interest rates don't necessarily determine the direction of the market. Logically, you would think that higher interest rates would mean lower market and vice versa, but it's not always been the case in the last 10 years at least. So I think people are now beginning to wake up to that reality. And of course, they also realized that they were very underweight in emerging markets, so it's coming back.
But how much of it is momentum chasing? Because all markets are doing well now. So there is an element of that surely with the way ETFs are getting money. Do you think it's that, or do you think there's been a decisive fundamental turn once again in emerging markets?
Well, I think it's a number of things. First of all, I think people realized they were underweight.
Yeah.
And a lot of people don't realize that if you look at the global marketplace, the market capitalization of emerging markets is now 30+% of the total. So if you're less than 30, you're underweight. And if you look at exports, imports, GDP, the share of emerging markets is now over 40%. So that's one thing. People are beginning to wake up to that reality. Second thing is people realize that, hey, how long can the bull market in America last? Particularly with the, the whole change in the administration and so forth. Because some people, as I do, feel that Trump could give a boost to American growth, but it's dicey. It's not clear that will happen. So I thought a lot of people have beginning to realize we've made a lot of money in America, let's diversify. Where do you diversify to? Emerging markets, logical place. And the third thing is that people are looking at growth. And I know a lot of people have been worried about China growth, but they've already set a target at 6%, which I think is achievable. But India is growing at 7+. So that is having a big impact. Then you have Brazil having this incredible recovery, and Russia also had a big recovery. So a combination of all these things have led people to believe that maybe emerging markets are where they should be.
You think that there is a risk of destabilization of the market because the importance of ETFs today, the amount of money which is coming in, which comes in and goes out together?
Definitely, yes. There's definitely have an impact, because in the large, giant ETF funds are buying the same stocks, and they basically end up controlling the market.